Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies SoFi stock. In this video, we will be analyzing two articles, to where the first one is titled SoFi Stock Prediction: Can the fintech favorite hit $16 and win? And then it has the subtitle of SoFi has a number of growth catalysts that could see the lending platform's shares rise to $16. So clearly we're going to be talking about these catalysts, their upcoming news updates, and of course their price targets. After that, we'll be moving on to another article titled Better Buy: SoFi versus JPMorgan Chase, to determine which one of their stocks are a better buying opportunity right now, and the results may shock you. So for more videos on SoFi Technologies and their SoFi stock price, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and don't forget to become a member of this channel for as little as 99 cents, because that's what keeps me here on YouTube. But with that being said, let's jump right into today's stories. SoFi Technologies, as you probably already know, is a fintech company that essentially operates as a digital bank, and they do this by operating as an online lending platform that provides a range of financial services as well as financial products, which would include personal loans, mortgages, student loans, investing, banking, and insurance. And recently, the company has stated that their goal is to help their customers achieve financial independence. So it's very cool to see how a financial institution has the exact same goal as my channel here on YouTube, which is to give you financial independence so you can get financial freedom. And we've been reporting on SoFi Technologies for quite a while now, and we have experienced phenomenal growth from this company. SoFi has grown rapidly in recent years, and although their current share price is $8.19, there is a lot of further upside ahead for this company. Currently, many investors believe the company is undervalued right now, and that they are poised for strong demand in the coming months, which could cause their overall share price to increase very dramatically. And here are three reasons why this author believes that SoFi stock will hit $16 by the end of Q1 of 2024. The first reason he cites is that their deposits are increasing and that they are extremely resilient and strong even when other larger banks were going out of business. For instance, the banking sector received a lot of attention, particularly during the beginning of this year, as well as when the overall banking crisis was happening. Several regional banks collapsed during that time due to various liquidity problems as well as credit quality issues, which sparked fear in the investment community. So a lot of investors ended up liquidating their investments in various banks because they thought all of the banks were going to collapse. However, instead, we only saw a few banks collapse, and the banks that remained saw a huge surge in influx of money and new consumers, and SoFi was one of these institutions that received a lot of upside because these other banks collapsed. While the United States regional lenders experienced sluggish or negative growth during this time, particularly in regards to deposits during the first half of 2023, SoFi actually increased their deposits and revenue during this extremely volatile time. So again, while other banking institutions were struggling and collapsing, SoFi Technologies was increasing their overall deposits and increasing their overall sales and revenues, meaning that this company is very strong and resilient even during times of volatility and during times of a crisis such as banks collapsing. SoFi also reported interest-bearing deposits of around $12.7 billion, which is a 1.7 times increase from last year's deposits, which were $7.3 billion. So clearly, by these other institutions collapsing and falling and failing, the members of these institutions wanted to run to safety, and they ran to SoFi Technologies because they have such good risk management policies in place that allowed them to survive this overall crisis. On top of that, we also saw strong growth in their digital banking products from their SoFi Money segment, which is very endearing. So that is the first reason why this author highlights why he believes that this company is going to surge to $16. The next reason he highlights is that SoFi has successfully taken businesses from other larger banking institutions, and this is actually my favorite part of SoFi Technologies. For instance, the CEO of SoFi Technologies, named Anthony Noto, told Bloomberg in an interview that their lending platform has been taking market share away from larger US banks, and they've been doing this for years. Some of the larger banks that they are stealing market share away from, which is great news for SoFi, would be banks such as Citi, Wells Fargo, PNC, and many others. On top of that, we also see that SoFi has a leg up on other banks, such as Bank of America and Chase, which do not offer unsecured personal loans. And more recently, we saw that Goldman Sachs has been the latest large financial services company that has stopped issuing such loans, which allows SoFi to further infiltrate and take up any slack that has been left behind by these other banking institutions. And this has led to a huge 37% year-over-year increase in the amount of personal loans that they are bringing in as of the second quarter, which demonstrates their segment's ability to grow and scale over the long term. And this is literally one of my favorite parts about SoFi, that they are stealing away customers and market share from these larger institutions because SoFi Technologies app is just so easy to use. They have great customer service, and anything that you will need is at your fingertips. There's really no need for a brick and mortar store or for you to go physically into a bank when their app does everything that you could possibly need. Lastly, we know that the student loan moratorium is ending or has officially ended, and that student loan repayments are restarting. And since SoFi is one of the largest student loan refinancing companies in the United States, we can see billions of dollars flood into student loan refinancing companies, including SoFi Technologies. So as payments resume, borrowers will likely seek more refinancing options to lower their overall interest rates and their monthly payments, and SoFi can do that for people who have student loans. This will create a huge opportunity for SoFi Technologies to continuously grow their revenue and reach profitability, which will propel the share price even higher than it is right now, close to $16. Like we said, it's going to generate more revenues and profits over the long term, and once they become profitable at the end of 2023, that is going to be another phenomenal catalyst for this company, and that's why this author, as well as myself, believes that SoFi Technologies is on a fantastic growth trajectory. However, how does SoFi Technologies compare to a much larger bank such as JPMorgan Chase? Well, I'm glad you asked. To see how SoFi stacks up against this major competitor such as JPMorgan Chase, we're going to have to look at the fundamentals of these companies. So let's start off talking about SoFi's value proposition. SoFi stock is already up 76% this year, making it one of the best financial institutions to buy right now, considering its momentum factor. Currently, it trades around $8.19, but like we said, investors and professionals believe this company could surge up to $16 over the next 12 months. And the reason for this is that SoFi Technologies is a one-stop shop for financial services and products. For instance, if you know Robinhood, which is a stock trading platform, or Upstart, which issues personal loans, as well as other type of companies, SoFi Technologies is a single institution that can do anything that Robinhood can do, and anything that Upstart can do, and anything that essentially Bank of America can do. So instead of owning Robinhood, Bank of America, and Upstart, you can just own SoFi Technologies because they do all of those things anyway. They have a stock trading platform, they have a crypto trading platform, they have personal loans, student loan refinancing, mortgages, credit cards, debit cards, checking accounts, savings accounts, and so much more. So I really like how you can just have one app which does everything that you need. And while other fintech stocks have floundered during the current macroeconomic environment that we find ourselves in right now, SoFi has been growing despite this overall volatility, posting a growth rate of 37% in the second quarter according to their revenue, meaning that they brought in $498 million. On top of that, they are scaling their members very efficiently. Their members are currently up 44% to 6.2 million after adding an additional 584,000 members in the most recent quarter. So these are extremely good statistics for SoFi Technologies, and I really like looking ahead because I believe this company will continuously scale. However, how does SoFi Technologies compare to their competition, which would be large cap companies like JPMorgan Chase, which in my opinion is literally the top banking institution? So if you don't own JPMorgan Chase already, feel free to look further into it and do your own research. I personally hold both of these companies in my portfolio, but I own more JPMorgan Chase than SoFi because they are just a more stable financial institution. So let's see what JPMorgan Chase has to offer investors. JPMorgan Chase is not valued like the growth stock of SoFi. However, in the third quarter, we see very impressive results. For instance, their managed revenue rose by 21% to $40.7 billion, not million, billion with a B, and their earnings per share jumped by 39% to $4.33. Both of these numbers, by the way, beat analysts' forecasts. So again, this is an astounding beat for JPMorgan Chase, and this company is extremely solid and resilient. Consumer demand also continues for their debit cards and credit cards, which increased by around 8% regarding their overall volume for these products, and their loans across their business rose 17%, on top of their net interest income improving by 30%, or 21% if we exclude their acquisition of First Republic's asset, which equated to $22.9 billion. Currently, their share price is rather high at $148.58, but many professionals and experts believe this company could surge up to $215. So if you're looking for strength and resiliency, you're not going to get much better in regards to a financial institution than this company. Now, the CEO of JPMorgan Chase did warn consumers and investors that the economy could turn sour, noting that there are geopolitical tensions and risks while consumers' savings are drying up in a higher interest rate environment. But despite that, this bank seems very well positioned to survive any crisis or headwinds that the economy might throw at them due to their very strong capital position and fundamentals. And we also see banks such as JPMorgan Chase actively pursuing mobile customers, to where their mobile customers increased by 9% in the quarter, showing that more and more customers are using their app. In other words, JPMorgan Chase seems to have done a fantastic job of evolving with consumer expectations as they continuously try to turn more digital while remaining their traditional fundamental strengths. So when we compare these companies head to head, which one comes out on top? Well, honestly, it depends on what type of investor you are. If you're looking for very high risk, high reward, then SoFi Technologies clearly wins here, considering that their growth rate and future projections stomp JP Morgan on a percentage basis. However, if you're looking for strength and resiliency and stable returns in a very low risk investment, then JP Morgan Chase clearly is the winner for you. So JP Morgan Chase currently trades at a price to sales ratio of 9, and they offer a dividend of around 2.8%, and that is something that SoFi doesn't have, because SoFi right now is not profitable and they do not have a dividend. So if you're looking for passive income in that sense, JPMorgan Chase will give you passive income in both their share price appreciation as well as dividend appreciation and dividend payouts. On the other hand, when we look at their price to sales ratio, SoFi has a price to sales ratio of 4.2, while JPMorgan Chase has a PS ratio of 1.5, making JPMorgan Chase a better value opportunity. But honestly, I think the author is wrong here, because if you discount their PS ratios according to their growth rate, then SoFi is more competitive than JPMorgan Chase. Lastly, I think SoFi's growth is extremely impressive, and their revenue growth is expected to slow significantly, but even as their revenue growth slows, it's still higher on a percentage basis than JPMorgan Chase's revenue increases. So although JPMorgan Chase does not have the growth potential of SoFi stock in regards to their share price, because JPMorgan Chase's share price is not supposed to double over the next 12 months or the next 3 years like SoFi Technologies is, depending on what analyst you talk to, but they have proven that they can overcome any singular risky obstacle in the banking industry. So again, if you're looking for high growth, high reward, high risk, then you want to do SoFi Technologies. But if you're looking for passive income, safe investments that will give you pretty good returns without the risk of you losing any money, then JPMorgan Chase is the one for you. So it honestly just depends on what type of investor you are, and I personally own both of these companies because I think both of them should be added to a complete investment portfolio. You do want a couple risky, high growth, high risk companies, and you want a lot of stable companies that you know are going to pay you over the long term. So I would love to hear your thoughts down below. Don't forget to go and annihilate that like button right now. Comment your thoughts down below. Subscribe if you're new. Don't forget to become a member of this channel to support me personally, because that's what keeps me here on YouTube. And with that being said, I will see you in the next YT video.